Hello, everyone out there. It is Joe and Darren over at Urban Hillsides Real Estate with your hot topic of the week. And the hot topic of the week is really a continuation from last week. Big news, right, Darren? Last week from the Fed, no change in the rate, and we didn't really know what was going to happen. But here we are this week now, and what's happened?
Yeah, so we had a small adjustment down, an expectation of them not increasing, but that
Hmm.
trend continued. We've come down more than a half a point
Hmm.
over the last week, maybe week and a half, and it's relevant. It's gone from low eights to down to 7.5 as a national average on a 30-year fixed rate.
Yeah,
Um, it's great. I think it's going to create a little bit of stimulus in the market again heading into the holiday
yeah,
season.
yeah,
Um, and we just did the calculation. It's a mid threes, like 325, $330 difference in interest per month,
yeah.
and your
That's
monthly
sizable.
payment. Yeah,
Yeah.
that's substantial.
All right.
So
Well, look, we're gonna take a look at a CNBC article that just kind of encapsulates all this, and we'll make some more comments. So let me just share a screen here. Uh, okay. So title here is "Mortgage Rates Plunge." Plunge. I can't even talk. Mortgage rates plunge, and demand finally inches back. Uh, so key points: the average contract interest rate for 30-year fixed rate mortgages with conforming loan balances here, 726,200 or less, decreased last week to 7.61% from 7.86%. Applications to refinance a home loan increased 2% for the week and were 7% lower than the same week 1 year ago. All right. Mortgage rates saw the biggest 1 week drop in over a year last week, causing the first increase in mortgage demand in a month. Total mortgage application volume rose 2.5% last week compared with the previous week, according to the Mortgage Bankers Association seasonally adjusted index. The average contract interest rate for 30-year fixed rate mortgages with conforming loan balances, that's 726,200 or less, decreased to 7.61% from 7.86%, with points falling to 0.69 from 0.73, including the origination fee for loans with a 20% down payment. Last week's decrease in rates were driven by the U.S. Treasury's issuance update, the Fed striking a dovish tone in the November FOMC statement, and data indicating a slower job market, said Joel Kahn, Vice President and Deputy Chief Economist at the MBA. Applications to refinance a home loan increased 2% for the week and were 7% lower than the same week 1 year ago. Mortgage rates are pretty close to where they were at this time last year. So there is not a lot of incentive to refinance. Most homeowners refinanced 2 years ago when rates were hovering near record lows. The vast majority of current homeowners carry mortgages with rates below 4%. Applications for a mortgage to purchase a home rose 3% for the week, but were 20% lower than the same week a year ago. The decline in interest rates is still not enough to offset sky high home prices, which are still rising due to the very low supply of houses for sale. Mortgage rates started the week slightly higher, but this week holds fewer economic events or reports that would influence rates. Last week's combination of the Federal Reserve keeping interest rates unchanged and a lower than expected monthly employment report was the perfect storm for the dramatic move lower in rates. Well, there you go. So, not the end all be all, but some positive, better news, right? We're not fully recovered here by any means.
Oh, it's the best news in the rate world in over a year.
Yeah.
And it can, like, today it's down a little more. We're looking at an average uh on mortgage daily news of about 7.41.
Nice.
Um, so we'll see if the trend continues. I think the Fed language is important. Whatever they say, people are have their ear tuned in. And also, as mentioned, the
Mm.
jobs numbers came in damn. I mean, strong labor market definitely drives rates up, and that's been an element of where rates are going. Not only debt,
Mm.
but strong labor market. They have been trying to intentionally soften that and level off housing prices. So here we are.
Now, there's one more announcement this year, Darren. So that would be December.
Correct. Yes.
Right. And then I don't know if this will make any bearing on it, right? But next year is election year, right? I think we're 68 days away from Iowa. So
Nice.
let's hope, right?
Is it
Let's
that
see.
early? No.
I heard
Wow.
68 days today.
Woo.
Yeah.
Oh,
Yeah.
man. Oh, so much drama. I don't know if I'm ready to digest a federal election again, Joe. It's so
Well,
much
they say,
mudslinging, man.
right, but they say, right? Hopefully, maybe that'll keep the rates down in some way.
I think they will just try to stay level. I agree. Well, it'll probably make the Fed hesitate to move the rates up.
Right.
They'll just keep it level. Well, cool, man. That's a
All right.
record one at under 6 minutes.
Yeah, 5:48. Okay. Well, look, guys, thanks once again for joining us. Like us, follow us, tell your friends, tell your enemies. Thanks for joining us this week. Have a great one. Take care.
Bye.